I'm Corbett Wall with USDA Livestock and Grain Market News, here with your weekly feeder and stocker cattle market summary for the week ending March the 15th, where your feeder cattle going right into the feed yard sold $2 to $5 lower. A lot of pressure on the market this week, mainly because of feed costs. There's just no relief in sight on these feed costs and what they're losing on a lot of these cattle coming out the other end of the feedlot. They just don't have any desire to do much more of it. Your fed cattle market's struggling and can't seem to get through that resistance point at that all-time record value of 130, and that's where they're at right now. And a lot of these cattle that are hitting the show list right now have a break even that's well beyond 130, and we can't seem to break through that point. And so the last thing we want to do is give a whole lot more for cattle going into the feed yard, especially when they know how tight these feed availabilities are going to be and how high the feed costs are going to be. Until we get into a new crop, it's just going to be really tough to be able to feed these cattle what the feed's going to cost, and the availability of it. You know, if you got to have some hay to grind in there, and distillers is getting hard to come by, and we just got feed shortages and feed costs just really putting a heavy weight on this feeder cattle market. Your stocker cattle and calves sold very uneven, but in most instances the lower or the losers in the market outweighed the gainers, although most every area you looked in had higher and lower stocker and calf prices. Down in the southeast was no different. They were higher in some places, lower in others, but the losers outweighed the gainers for the most part, as you do have local demand, as they've had a lot of rain in that part of the country and they've had warm enough weather. They're starting to green up and they're going to have a lot of grazing. But the southeast really depends on your western orders, and those are just slow coming in because these guys in the west that are going to have some grazing, and there will be some grazing even though most of it's still in drought and all that, but we have had enough snow and enough little inch or two here and there to get that grass kick started. But they don't have any feed, and they don't want to buy any feed and put a lot of extra price on those cattle. So the cattle that they really want is some heavier stockers weighing 5.5 to 6.5 right in there, that are pretty foolproof cattle there. They don't take a whole lot of preconditioning. They can take those cattle and basically take them right to grass when it gets to here. And we're still about 3 weeks or maybe a month away from grass. So we hate to buy any of those and have to shut them up and find some feed and buy that feed to send to hold those cattle until they're ready to turn out. But also those heavy feeders weighing in the sixes, you know, if they could put 300 pounds on those cattle in a grazing season, which is doing it all, those cattle will come off as heavy feeders, have a lot of dollars per head value to them, and they will make it until we get to new crop corn, which everybody's looking forward to and can't wait for, and hopefully it's a whole lot better than last year. But those cattle can have a lot of value to them. Your auction receipts this week were fairly heavy, heavier than last week and heavier than the same week a year ago, but still we're running roughly 17% as the year goes, 2013 year to date. Receipts are about 17% behind last year, 2012, and the 5-year average. So there's less cattle around, and we know that, and probably less than that 17% available for bids. But you know, the feed cost is basically holding everything down, and there's absolutely no support from the CME board, as it struggles every trading session. It seems it was lower every session except for one this week, and didn't find any bottom to it throughout the week there, as we just have nobody that wants to take the long side. These futures markets, the industry itself puts so much pressure on the short side and hedging and things like that, is you got to have somebody on the other side. And most of these big fund investment groups and things, they're jumped on board with the stock market as it's rallying to new highs almost every day, and it sucked a lot of that money out of the commodities. And until that kind of tames down and they think these commodities are getting undervalued, we just don't have any support right there. But we're having a lot of problems with feed shortages. We talked about in the past, we worried about whether our corn stocks were going to last until new crop. Well, hay is even worse than that. We're running out of hay. Producers are running out, scrambling around. Nobody's got any for sale. The prices that they're charging is horrible. But and we're quite a ways away from another hay crop. But guys are having to make some tough decisions. The Olson Ranch in Nebraska there, for 3 generations or so, have always grazed their calves, made them long yearlings, and retained ownership all the way to finishing. This year they needed that grass for the cows. Sold 1,600 head of calves at Erickson, Nebraska sale barn there last Saturday. Thin, black-hided calves, top quality. On the steer side, they had 5 loads of thin-flesh, top-quality black steers, weighed 510 pounds on the average, $199. Had another 5 loads, averaged 605 pounds. Average price on those, $173.75. So, not that they're going to go broke taking those prices there, but people are really having to change their way they do business and their traditions to try to get through this drought and through these market challenges, through these feed shortages. Fat cattle, $1 lower on live price, $127 this week. $2 to $3 lower dressed at $201. It's not support there, even though our box beef cutout values really took a jump here in the last 2 or 3 weeks. And actually your select boxes hit an all-time record high on Wednesday at 196. Choice select spread's real narrow, so the choice was quite a ways from setting their record, but 196 on select was an all-time high. The problem is we're not getting enough movement for that to be significant to the market. So we just need really the northeastern seaboard to come out of all this snow and cloud that's been over them, let it warm up there, guys get their grills out, get back out in circulation, start going to restaurants and consuming a lot more of that beef, and we'll probably back that market off just a few dollars and then have some considerable movement, which would be a bigger shot in the arm to the beef and cattle business than posting a high on real small movement. But this week's regional weighted averages in your feeder cattle markets: in the north central states, 800 to 900 pound steer this week cost you $129.73 compared to $132.64 last week and $148.02 a year ago. Down in the south central states, a 700 to 800 pound steer cost you $135.95 compared to $137.65 last week and $155.42 a year ago. Down in the southeast, a 500 to 600 pound steer cost you $149.99 compared to $153.50 last week and $174.08 a year ago this week. That wraps up your feeder market summary for this week. Check out our website for more market information at marketnews.usda.gov. From the Regional Market News Office in St. Joe, Missouri, we'll talk to you next week.